Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone is doing great. Happy non-farm payroll Friday. We have a lot of shenanigans this morning, a lot of volatility as the market responds to some pretty crazy, and when I say crazy, I mean we were expecting on non-farm payroll, the previous number was 398, and that has an upward revision, by the way, revised from 372. Okay, not a big deal, right? We expected 250. We got 528,000. Now, normally, if I'm in the room, people are going to say, well, that's not real. Doesn't matter. That's the number. That shapes the reality. And that number is really good. All right, what does that do to the market? Well, the thing, and by the way, when I'm in the Ask Me Anything session, I'm going to go over some of the data that I look at with these types of events. What were the whisper numbers and how far off were they? And, is it even worth looking at things like whisper numbers? So we're going to do that during the Ask Me Anything session at 2:30 Eastern today. We have our 90-minute tech, trades, review, your questions, my favorite color, what have you. We'll have that today. And we'll be doing that in the futures and the sector secrets mastery room. So that's what we've got. What's the market going to do in response to that? Remember, we're still down the rabbit hole. If numbers are better than expected, indicating that the inflation picture is lower, that's better. The growth is stable or higher, which we don't have right now, or jobs are stronger, those are better. So know where better is on those main three pillars. Better is lower for inflation. Better is higher for growth. Better is clearly higher for jobs. Better means lower. There's your punchline. Better means lower. Why? Wouldn't it be good news that the market is reflecting, or I should say data, is reflecting a stronger economy from that jobs perspective? Not if good news paves the way for a more hawkish Federal Reserve, I won't say policy because we're already there. So let me take you on over to how we measure this, right? Let the talking heads and let people guess at what's going on in the economy because of, whatever's happening at shopping malls or what have you, right? We're going to do what? We're going to look at a rate of change, really the only thing that matters right now macroeconomically, and that is, where do the target rate probabilities line up for December? We've been harping on this. I will continue to, because once you know where the measuring stick is, once you know what a foot is, why would I redefine a foot? Why would I redefine what that means? Unless it's recession, in which case apparently we can continue to redefine it whatever we want, which is again why even before the redefinition, I said, gang, do not give a hoot about recession. Does not matter. So back on reflecting on this December meeting, remember that we have, for the most part throughout this year, been expecting that when the Federal Reserve is done, they're going to drive us to 3.5 to 3.75 percentage points. That's what this tallest column here means. This is nothing new. This is nothing that we haven't actually seen for most of 2022. What was new was the 325. What was newer still was just how much the 300 to 325 column was getting taller. So now what we have is we're just getting back to where we were in terms of where the Federal Reserve is going to have rates come the end of the year. Being anywhere new presupposes that you've been studying this for a while. If you've been following the free videos, if you've been following anything that I've been doing here in Charts and Coffee, we've been watching this on a very, very regular basis. Unless that 375 to 400 column really starts to move, we're fine. We're fine. Now, what does that mean? Rag, what do you mean we're fine? We're down today. What are you talking about? Okay. Let's go back to where have we been? And gang, look, the media wants to scare you. They want to use hyperbole, meaningless hyperbole, like crash and correction and all these things that are supposed to keep you scared. Why? So you keep listening to them and you don't trust yourself. I'm betting on you. I'm betting on you care more about your money than they do. I know I do, right? So this is what's worked for me, right? This is what's worked for me for the better part of 3 decades. Take from it what you will. Focus on what the Federal Reserve is looking at, not what television wants you to look at, not what clickbait headlines about crashes want to grab your attention and make you feel a certain way. Gang, this is where we are. That candle, let's put this in perspective. That's the candle. Do I need a markets in turmoil special for this? Probably not. We're stuck in a range. So as long as we really don't go substantially lower than the low we plotted back on June 17, which, by the way, on the September contract of the S&P was 36.39. And as long as we basically stay between that level and 4,200, we're just going back and forth. That's it. That's it. So I think non-farm payroll pretty much sealed the fate for traders who were expecting a test of the 200 exponential. Probably not going to happen, obviously. But why would we expect the market to keep moving higher if, when the last time we were here, the resistance and the behavior looks remarkably like what we're seeing right now? Gang, I know past performance doesn't indicate future performance, right? Future results. We know this. But past behavior does map forward. So that's where I'm going to say, look at what happened in end of May to beginning of June. Project that forward, look at the previous resistance and the behavior, and look at what we're getting right now. It may not rhyme, right? It may not exactly be the same, but it's very similar, right? As what did I say? What's that saying? History doesn't repeat itself, but it sure does rhyme. So yeah, it's not repeating exactly, but it sure does rhyme. So that's it. That's my take on what we've got going on so far. Let's keep an even keel. Let's not try to front run our process. Let's not try to front run data. Let's always react, respond to what we have, right? Or as it's often said, right? It's very old trading wisdom. Trade the market you have, not the market you want, right? Okay, trade the market even you see, right? Trade the market you see, not the market you wish you were seeing. All right, to the questions. Let's jump on over to those. All right, there we go. And first up is NQ. NQ, sure. By the way, traders here, on non-farm payroll Friday, I do not day trade the open. When I go back and I look at, at this point, decades of my day trades, going back to the late 90s, and even just the last few years, when I look at the days that and this is my thing, for you it might be different, but since I'm calling trades, I got to be respectful to the people that I'm calling them to, right? So when I'm calling trades, calling day trading ideas in the Sector Secrets Mastery Room, Monday through Friday, and I know there is a time, there's a day that I just don't have at least a 60% win rate when I look back over results, I really should shut up. And that's on non-farm payroll Friday. That's a shut up Raghee day. On options expiration and end of quarter is abysmal for me. Now, non-farm is interesting because I either have, when I look at the win rate on non-farm, it's actually right around 52%, 53% in my favor. So it's a little bit better than a coin flip. It's not a bad day for me. It's not as if I lose every non-farm. What I realize, and the temptation for me to trade on non-farm, is when I do have a good non-farm payroll day. You all saw me do that in June. In July, I struggled. And I thought, you know what? I'm not going to go coin flip. I usually have a really good non-farm payroll day, or I have a really bad non-farm payroll day. So the reason I sometimes have tried non-farm payroll, and again, is because when it works really well for me. When it doesn't, it's not going to work well for me. So I'm going to remove that for a little bit. So what are those days for you? What days do you know, based upon calendar events and the volatility that accompanies that, or maybe lack of volatility, right? Maybe the first 2 weeks of August are notoriously difficult for you. August is difficult for me. We had a tough Monday. Tough meaning I think we went 1 for 3 on day trades Monday. Had a fantastic Tuesday. Had a tough Wednesday. I think we went 2 for 5 on Wednesday. And then Thursday, I think we went 4 for 5. Yesterday was terrific. Yesterday made up for any of my losing days this week, and I'm going to end on a nice positive note today because I'm not going to do anything stupid. I like my money too much. And that is what history has taught me, to respect those days. So find those days for you. Coopzilla, there's not much I'm going to do with the NQ. I'm not going to day trade it today. You can see the vol. For those of you that use my hourly price movement range tool, I make the ones for the indices available free in the Sector Secrets Mastery and in the futures room. And you'll see right through here, they flipped. They've gone berserk. That's right there. It's going to tell you we need to wait at least for 9 to 10 or 10 to 11 to get some sort of normalcy back in the volatility, because abnormal volatility is unpredictable volatility. And unpredictable volatility is very difficult to control risk within, right? By the way, those of you that are maybe going to venture into the markets this morning as day traders, again, I will not, and we will not have sessions on those, sort of troublesome days in the mastery. So today, enjoy your nice day off. Maybe watch the shenanigans unfold with the bell. But there's not much for me to do, Coop, other than maybe look at the resistance on the daily, which is not super. It's just a stall right now. I won't say it's a reversal. It's amazing what categorizes as a reversal anymore. A down day is a reversal. Hardly, right? So would I call today's S&P a reversal? No, it's just really in a range that mimics what we saw back in May and June. So nothing really. I'm not going to do anything today, but I will observe how we close today. And when we're in Ask Me Anything, we'll be together for the last 90 minutes of today's session. Let's see what kind of mood the market goes into the weekend. Are we going to consider this very strong jobs number a reason for the Federal Reserve to get back that 3.75 to 4% column? No. Are we going to presume it's going to be the 3.50 to 3.75? That's what it indicates. And if that column continues to increase, very unlikely we'll continue to see breakouts in the broader averages, because the reason the broader averages moved higher, and again, if you've been following along, Rag, we've been watching those target rate probabilities fall to a quarter point less hike, even flirting with a half point less hike. Equities like that got us to where we are. We get to the resistance, and what happened? Oh, we're back to the more hawkish end of that spectrum and those columns that I showed you. So nothing really that I can do with today's data other than acknowledge that we still are in chop, and I should not be overtly bullish because I don't have an uptrend. And in chop at the top of the range, that is that's out on a limb if you're a buyer, because you're buying right at where we could be exhausting. That's my thought on both the S&P and the NAS. All right. So next up is, let's see. How much room do we have to move lower on the S&P this morning? Well, I will take that hour by hour, because each hour presents a volatility range unique to it, right? If we go back and look at volatility through a PMR calculation, price movement range, which is a historical volatility study standard deviation. Okay, that's really what it is, 68% probability of what kind of range. If I look at that, that's going to recalculate every single hour. It's not a cumulative tool. It's not like ATR, which I most definitely do not use. Nothing wrong with it, just PMRs calculate in a way that makes more sense to me, which is to say historical volatility specific to the hour, specific to the day, with a much larger sample size of behavior, 6 months, as opposed to 7 or 14 or 21 periods, right? Okay, so every hour is going to be new, and I will have to look at how much lower based on where we are in relation to the volatility. In terms of today, well, remember, because of what we're dealing with non-farm payroll, we could push, obviously, the upper end of volatility. And I'm just looking over to my other screen here. Let me tell you what Here, let me take a quick peek for you. So what's the possible range for the S&P today on the upper end and on the average? About 98 to 115 points. 98 to 115 points. This is also PMR done on a session by session, not hour by hour basis. So if you take the high we have right now, presuming that we don't put in a higher high. All right, so let me grab the calculator here. So 41.43 is the current high. So presuming we don't put in a higher high, right? 40.45 or there you have it, 40.28. That would be the average to higher end of historical volatility moving us to the downside. By the way, the lowest number of points we could move, again, 68% of the time, is about 81 points. And that's the most minimal move I would expect is 40.62. That's the downside. That's how I do it. I go right back to historical volatility, historical price movement ranges, PMRs, right? PMRs. All right, next up, good morning, Karthik. Can we buy pullbacks in the 34 EMA on double green on sectors like XLK? If they're double green, yeah, they're double green, absolutely. So on Tuesday and Wednesday's Sector Secrets Mastery sessions, we set up a pretty significant, pretty beefy double green watch list, not chop, not double red, but where are specifically those stocks and sectors, mostly stocks, leaders internally within those ETFs at the stock level. Where are those leaders within these ETFs, these sectors that are already showing that double green? Apple is probably one of the more obvious ones within the XLK. So you can buy the dip on Apple. You could buy the dip on XLK. Absolutely. What about SMH or semiconductors by the dippable? Just barely, Karthik, just barely. Yesterday was the first day we gained enough traction along the 8, 13, 21, 34 to even consider that. So just barely. So I would say that let's give XLK, let's give SMH semiconductors till Monday or Tuesday to say, you know what, you got the traction and now you're definitely pulling yourself higher. But XLK, Apple, no problem at all. Yeah, no problem at all. Robert asks about AMZN. Oop, be nice if I typed it in right. Amazon's going to map to XLY. Amazon's a double green. It's got a little bit more traction. It's trying to get above that 200 propulsion, that 200 exponential propulsion. Let's take a look at XLY. Are Amazon and XLY in sync? They should be, because Amazon's your number one stock within the consumer discretionary sector. Amazon's a little further along, though. You see how just by a little bit, Amazon is showing it's able to take out that 200. Not that much better than the XLY, but just a little bit. These two are in sync. This is great because this is the rising tide, meaning the XLY, the tide that should lift all the boats, even ships, even big ones like Amazon. We should start to see strength. So I would crack open the XLY. I would crack that sector open and start to see, well, what else is going on in there? What else is showing me that kind of structure? Now, here's a really important tip, gang, and we do this kind of work and breakdown in the Sector Secrets Mastery all the time. The more the heavily weighted boats, these bigger boats in the XLY sector are double green, the more I want to play the sector itself. McDonald's, Tesla, Amazon, fantastic. That is XLY. All right. So I do like that corner of the market very, very much. Okay, cool. All right, gang. Well, it's 9:20 and that is a wrap. Thank you as always for joining me for Charts and Coffee. Caffeinate and dominate. Caution day for me. It's okay to take a day off and say this is not a high probability day, but that means you're studying your numbers, right? That means you're studying your probability and your win rates. And while non-farm payroll is a very, very good or bad day for me, I'm just maybe hitting the pause button on this particular day. But for now, I'm pretty content with the fact that, we're ending up on the week and let's just not put the positive trades that we've accumulated this week in any danger. I'll see you all and Ask Me Anything. today. And then I'll see you all for our Sunday weekly Raghee Report show, 6 p.m. Sunday, Simpler Trading YouTube channel. Be good to each other, gang. I'll talk with you soon.